Good morning. You are listening to National Real Estate Auction Radio. I am your host, Doug Dennison, and we are broadcasting from beautiful St. Augustine, Florida, the nation's oldest city at WFOY 1240 AM studios. Through the power of the internet, this program is being streamed worldwide on 1240news.com. The show will also be archived on RowellAuctions.com, as they are the sponsor of this program. Additionally, this show will be posted on YouTube.com. We're going to be talking about real estate auctions, and to help us out, we got a real treat. I wanted to do something about what happened in 2012, and I was lucky enough to get a hold of the Florida Realtors, friends there that got me to the Florida Realtors chief economist, Dr. John Tuccillo, and he'll be calling in 3 or 4 minutes. And we're going to go over the top 12 stories in 2012 that reflects real estate. And that's what this program is all about. As you know, the radio show mission statement is to provide an educational experience for listeners in a promotional format for auctions across the country. And so very excited to have John give us a call, and we'll talk about, again, the top real estate stories of 2012. It is on their website, and it's which is floridarealtors.org. And so we're anxiously going to be talking about the stuff that's really affected all of us. As I think a lot of us know, how real estate goes, so does the economy, or vice versa. But big impact on what happens to our nation is, how is our real estate doing? Are people buying? Are they selling? Is the prices going up? Are they going down? What's the government doing? And we won't be talking about the government that much in this segment. I'll probably do that a lot next week when I kick off the new year, talking about trends and all that kind of good stuff. We still got 14,000 government surplus properties out there that the government needs to sell. As we talk about the fiscal cliff today, and it's all in the news, please, sell these properties, bring money into the budget, stop paying holding cost on 14,000 government properties, which cost the American taxpayer billions of dollars. And that's a B, billions of dollars. So, again, Dr. John Tuccillo, Florida Realtors chief economist. He is with the Florida Realtors and has been there for many years helping out. And we'll go over a little bit of that in just a bit. Hope you all had a good Christmas and are having a good holiday, that you're spending time with a family. And we hope that next year is going to be a better year than 2012. Not only with real estate auctions, but your personal income, your personal growth, and the success of yourself and the family. We've had really a full year of VIP guests. They include congressmen, they include government officials. Very excited about this year's progress. We've got a call. Good morning, you're on the air.
Hey, John Tuccillo here.
Well, John, thank you so much for calling. You and I touched base a little earlier this morning, and tell us who you are. You're Dr. John Tuccillo, and you're Florida Realtors chief economist. But tell us your background, John, and tell us a little bit about yourself.
Well, I've got a PhD in economics from Cornell University, undergraduate at Georgetown University, been with Florida Realtors Well, actually, I set up the research department in December of 2010, came on as chief economist in September of 11. Previously, I had been NAR's, National Association of Realtors, chief economist from 1987 to 1997. And in the interim, ran my own consulting firm where I did business planning, strategic planning, et cetera, et cetera.
And you're from Sarasota, is that correct?
That is correct.
Okay.
I live in Sarasota.
Very, very good. Well, it's been a very interesting year, John, as you know. The ups and downs of real estate, the introduction that I gave our listeners, and to tell you who our listeners, John, are, they're real estate investors, real estate brokers, bankruptcy officials, government officials, and in general public. So I think the best thing to do is talk to us in regards to how the real estate affects the economy. And I was, in my introduction, I was saying, how real estate goes, so does the country. So does the health of our financial growth go when things are going well in real estate, and when things aren't going well in real estate, then we have a tough time with our economy. And if you've done the NAR for so many years, you've had a few ups and downs in your career as you kind of do the progressions from the 90s downturn. What's the difference between this downturn and let's say the early 90s downturn?
I think there really are two differences here. Besides magnitude, obviously, that's one of them. But there are two other differences which I think account for that magnitude issue. First of all, when in the 90s, we had what were termed then rolling recessions, which means that while some parts of the country are doing well, others were not doing well. Mm-hmm. So, for example, you may have found a real problem with the California housing market, say, in the early 90s.
Yes.
But yet New England was doing well. So you had that kind of spottiness in the 90s. This time around, it was universal. I mean, it just basically happened everywhere. The second piece, which made this one so much worse, was that it was accompanied by a financial sector meltdown. What we saw was a significant amount of over-leveraging, and that over-leveraging led to the point where folks were unable to meet their obligations and basically just punted. And what you had was a lot of bankruptcies, a lot of foreclosures, just really exacerbating the whole housing downturn issue. Housing was going to have a recession simply because there was, in the words of Mr. Greenspan, irrational exuberance in the housing market. People thought that what had happened over the past year or so was going to happen next year, and then when it did, it was going to happen the next year, and finally that particular process came to an end. Housing prices plunged, and then with accompanying financial meltdown, they plunged to a point where they just simply couldn't recover. So you had those two aspects, the financial meltdown and the universality of the housing downturn, which were different now from other housing recessions in the past.
Well, you talked about over-exuberance and over-leveraging. I've been in the auction business, and my specialty, John, is government auctions, government real estate auctions. But for 4 years, when the auction business was a little light, I actually went to work for Mike Pappas for the Kai's company and started a couple of offices in Boynton Beach for the Kai's company. And over-exuberance was, a modest term, because I believe what they were doing at the time is people were saying, all right, I'm looking at my bank account, I'm getting a small interest from the bank. I can't trust the marketplace as far as stocks and bonds, but I'm seeing this real estate just do amazing things, 10, 15, 20%, and I believe what they did is they actually used their houses as retirement plans.
Or piggy banks.
Yes.
Either way.
Yes. And what they did is, okay, I'm living in a $200,000 house right now. What I'm going to do is I'm just going to, go for it and buy a $350,000 home. And then, with everything going up, in a couple years I'll hold on to it, and man, I'll sell it for $450,000, $500,000, and that's how I'm going to retire. Forget that bank IRA or forget trying to see what's going to go up in stocks and bonds. This is the way I'm going to do it, and it just got out of control.
Mm-hmm. Well, the irony of it is we're now seeing the reverse effect, and I find it kind of funny. Right now, we're seeing a housing recovery. Well, one of the reasons we're seeing a housing recovery, especially in Florida, is because folks who have made their money back in the stock market, if you look at the Dow, you see where it's been for the last 6 years.
Yeah.
The folks that are making their money in the stock market now, or financial assets, are saying to themselves, well, it happened before, it can happen again. Let me diversify. Where can I diversify to? Hey, you know what? Real estate prices are way down. Maybe if I'm smart this time, I can diversify into real estate, and I can be okay. So what you see is people coming out of the stock market, coming out of financial markets, into real estate as investors, but not flippers. Investors who are looking at a 5 to 10 year time horizon now, and that is sparking the housing market and making the housing market better. So it's ironic how these things have a certain symmetry to them, where it gets you in trouble once, and it tries to get you out of trouble the next time. So it's kind of interesting.
It's very interesting, and the key to real estate investing is buy low and sell high. And if we all had the crystal ball, we'd all be millionaires. But
the guys who profited from this used the opposite of that. They sold high, and now they're buying low.
Oh, I thought that's what I said. Okay, all right.
No, it's the other way. No, you can do it two ways. You can buy low, sell high, which is one way to do it.
Yeah.
The other way is to sell high and then buy low, which is what folks are doing now.
Got it. Okay. Tell us a little bit about the Florida Realtors. I know there's just thousands of members and boards across Florida. Give us a little information on what the Florida Realtors do to help out the real estate agents in Florida.
Well, we have roughly 117,000 members.
Okay.
We have approximately 67 local organizations, and we are located in virtually every county in the state. So the organization is everywhere. And basically the organization, as far as its members are concerned, is involved really in two major areas. Number one is education. In other words, helping to make them better business people, better realtors, by training and teaching in terms of ethics, in terms of new techniques, technology, etc. The second major thing which the organization does is to provide tools for realtors to work with, forms to write out contracts and offers and closing documents, etc., those kinds of things. Now, we also do a great deal of public policy work because we have an office, our main office is in Orlando, and we have an office in Tallahassee which does public policy, and they're very active with both the legislature and the governor's office and the cabinet. Those types of operations more work toward the benefit of consumers, and for that purpose help realtors out. In other words, we create a better climate for homeowners and potential homeowners, and this in turn has the effect of promoting our members' business. So our public policy actions will indirectly affect members, our other actions will directly affect members, but they're all aimed at our major constituents, who are our members.
Well, I thank you for that summary. I mean, it's a big job that they do, but it's so important to train and to provide information for all of these realtors. And again, in my opinion, as real estate goes, so does the economy. But let's get right into the top real estate stories of 2012 that is on the website of the Florida Realtors, and very interesting. And I'm just going to go one by one, and I'm going to let you talk a little bit about it, and maybe I'll jump in and ask a question every once in a while. The first story was the real estate rebound. Talk about that a little bit, John.
Well, I think it's becoming a better known secret, but up until quite recently, the rebound in real estate in Florida has been one of the best kept secrets in the country. If you look at all the statistics, the free fall that real estate went into in 2006 effectively ended the beginning of 2009. Ever since the beginning of 2009, we have seen first a pretty well static market, and then a gradually growing market. In fact, it has grown at an even faster rate as time goes by, and that is basically showing up now in our statistics. Year over year, we're up in terms of sales. We're up over 25%. We're up over 9% in terms of prices. And we've looked at this in a lot of different ways. We look at it with the MLS data, we look at it public record data, and it all comes to the same conclusion. 2011 was better than 2010. 2012 will wind up better than 2011, and we're looking for 2013 to be better than 2012. And if you look at this in terms of home sales, those numbers are up 10%, 10%, 10%, 10%. So we're seeing about a 10% overall increase from on a year-over-year basis. When you look at the year as a whole, you know, the number that the 25% number was essentially the number of November over November. But by and large, we're still gaining about 10% a year. Prices are coming up, and generally the market, it looks a lot better now than it did a couple of years ago. Now we have no way wiped out the losses from the fall.
Right.
I'm not claiming that, but you know, we're on a nice path to get back to some sort of normal market which grows on a regular basis.
It looks like that, and generally speaking, and I know let's talk about Florida, not the country, but in 2006, everyone kind of agrees that was the top of the market. Did we lose 50% of value approximately in the housing in Florida through those, I guess, 3 years to 2009, 2010?
Yeah, that's roughly the case. From about mid-2006 to the beginning of 2009, prices in Florida, real estate prices in Florida, dropped about 45%. Okay. And you know, and this is not looking just at the MLS data. This is looking at the public records data, the Department of Revenue data that covers every single parcel of land in the state of Florida, and we're looking at about a 45% drop in terms of value during that period of time. On the other side of the coin, between 2000 and 2006, prices ran up 149%.
Wow.
So you can see that kind of big mountain that we sort of crested and fell off of shaping up. So yeah, that's the case. I want to talk a little bit. If you hold on to that 45% figure, that's going to come back when I talk about one of the other trends. So please hold on to that.
I will. And is there one area in Florida that is doing better and more unexpectedly than others? I've heard that Miami is just kicking butt down there.
Yeah, I think Miami, and I'd have to say Tampa as well.
Okay.
And Tampa is one of the reasons why Tampa is doing so well. Two reasons. Number one is they have a very diversified employment market. If you go to Tampa, you find major employment sectors in virtually all the major categories. You know, hospitality, entertainment, trade, manufacture, importing and exporting, government, both federal and state, et cetera, et cetera. So Tampa has a very diversified economy, and that's one reason. The other reason is that for some reason they've run out of inventory faster than the rest of the country, the rest of the state.
Very good. The second top story is headline, "There's no place like home." Got one. It's talking about low inventory. Give us your take on that.
Absolutely. We have seen a drastic reduction in inventory. The way we measure inventory is the months of supply available on the market at current sales rates. Okay, so that number can be affected by the number of listings. It can be affected by the rate of sales. So, in other words, we take a look at what's out there in terms of how fast things are selling. Now, we went in 2 years. We went from about a 2-year inventory down to about a 5-month inventory. 5 months is a little bit below the even market line. 5 months is a little bit below the line where buyers and sellers are balanced. In fact, we are moving right now throughout the state into a distinct buyer's market where we had been in a drastic seller's market for the past 2.5 years. That's a drastic movement, and we're seeing real inventory problems shape up in the lower end of the market, partially because of the investors that are in the market who are buying up bargains for the purpose of turning them into rentals. So we see a lot of inventory pressure in the lower reaches of the market, and even in the luxury market, we've seen inventories come down dramatically. So what's happening here is that there's not a lot of stuff out there to buy, and it is becoming a seller's market. And I think that's a very, very notable event of 2012. Now, I've got to tell you, Florida is a judicial foreclosure state, which means that to go to foreclosure, you must go through the courts. It takes up to 2 years to get through the courts. So there are a lot of cases which are now in process. If those cases were not in process, in other words, if Florida were non-disclosure, non-judicial foreclosure state,
right,
essentially you would have even lower inventories and a much brisker housing market. That, in fact, is what's happening in California. California inventories are down to about 3 months because California is a non-judicial foreclosure state.
So it's much quicker to foreclose on a property, are you saying, in California?
Gone. Yeah, exactly. And we have a protracted process, which means that we're looking at a market which could be a lot more brisk than it is now.
We've got about a minute before the break, and then we'll go back on to more stories. You're okay if we go past the break, which is a couple of commercials, and then come back on to finish out these stories, John?
Not a problem.
Okay. One thing before we go, and again, we've got about 45 seconds before it clips on there, but why is Florida and California, they seem to be the front runners, or either way up or way down? Why are those two states the roller coaster?
Oh, I think it's because of the attraction of the market. I mean, both states are very attractive for in-migrants. That's number one. Number two, they're very big states, except for Texas. They are the two biggest states in the lower 48. The third thing is that unlike Texas, the economy went pretty sour in both states. So you have those kinds of trends going. Texas had oil, so they were doing pretty well. And by and large, it's just a matter of volume. It attracted the most hanky-panky. It attracted the most people.
We got it,
John. The most exuberant.
John, hold that thought. Let's go on a break, and we'll be. All right, we are back. You're listening to National Real Estate Auction Radio. I am your host, Doug Dennison. We're broadcasting from beautiful St. Augustine, Florida. We have on the line Dr. John Tuccillo, Florida Realtor Chief Economist. John, are you still with us?
I am certainly here.
All right. Thank you. And again, I appreciate you being on the show today. We're going over the top real estate stories of 2012. The next one in line, the headline is Feliz Navidad, and it's talking about rental properties. How does that play into the system?
Well, before the break, I was talking about how investors have come into the market and bought up the bargains, and they put them out there for rental housing. Now, these investors really are two types. There are individuals, which we've always seen forever and ever, and then there are what I would loosely term funds, which would be either professional hedge funds, professional institutions, or groups of investors who have pooled their funds. These second category of folks are coming in and they're buying a number of properties. They're buying in blocks, and their plan is to buy low, refurbish to rental status, rent the units, or the in this case mostly single family homes, and then 5 to 7 years down the line, when the market has pretty much fully recovered, sell these things at a profit.
Got it.
And so what we've got is first of all, a very big now supply of rental housing. On the other side of the market, we have a lot of folks who have lost their homes.
Yes.
And we have also a lot of folks, mostly young people, who are finding it hard to become homeowners because of the stringency which has grown in the mortgage market. It's a lot tougher to get a loan now. You really need sterling credit. You need to have very, very low debt. And in other words, you really need to prove yourself to the lender in order to get a loan. So those folks are being kind of blocked from the home ownership market, so they become renters. So now you have a large demand for rental on one side, you have a large supply of rental on the other side. Nationally, rents have been rising pretty steadily for the past 3 or 4 years, and that's a function of the fact that the supply of rental housing has fallen short of the demand for rental housing. Well, here in Florida, we are now reaching the point where it's pretty much evened out, so we should see a stabilization in rents. But yet, we've got a much lower home ownership rate, we have more renters out there, and we have folks who are going to be there for a while. So the rental market has become larger and a fixture on the market, more so than it has been in the past.
Very good. The next one is titled, How Low Will They Go? They're talking about mortgage rates. What's up with that?
Well, a while back, mortgage rates were very low, and I'm talking here 15, 20 years maybe.
Yep.
And there was a famous Wall Street economist named Ed Yardeni, and they asked Yardeni how low can, he was talking about the Federal Reserve discount rate, which at that point was 3%. So, well, how low can the Federal Reserve discount rate go? And Yardeni said, well, there's a lot of room between 0 and 3. And I kind of give the same response now. There's still room to go. Right now, mortgage rates are probably even a little higher than are justified by money market and government rates. So we're basically talking about mortgage markets being able to go a little bit lower. And if by some odd chance the folks in Washington get their act together and perhaps avoid this so-called fiscal cliff,
right?
It's entirely possible we'll see a drop in mortgage rates going forward. There's no inflation on the horizon. The Federal Reserve has promised to keep the discount rate effectively zero until the unemployment rate gets below 6.5%, or 2015, whichever comes first. And we're basically talking about rates that are going to stay low for the foreseeable future through 13 and 14.
Good.
I suspect mortgage rates will not move very much.
Good, and you kind of tickled on the next title, which is Let's Get Fiscal. What's a fiscal cliff going to do to us?
Massively horrible things if it's not resolved.
All right.
There are 3 possibilities. Possibility number 1 is nothing happens, and we go hurtling off this fiscal cliff, or whatever it is. I suspect it's more like a hill than a cliff, but anyway. So we go hurtling off this fiscal cliff, and the economy essentially goes into recession in 2013. Has the expiration of the tax breaks, the expiration of the sequestration of funds will essentially remove the government partially as an actor in the economy. The economy will suffer, and we'll have a recession in 2013, and the real estate market will follow along with it. Possibility number 2, we solve the fiscal cliff. The Congress and the President come to an agreement to cut approximately, let's say $1.2 trillion from the federal budget deficit over the next 10 years, and everybody feels good about it. Tax rates aren't raised that much, spending isn't cut that much, and everybody's happy, in which case you'll see growth increase to probably a little over 3% in 2013. Having said that, I don't believe either of those is going to happen. I think what the most likely prospect is number 3, which is we continue. In other words, all the kinds of that January 1st deadline is pushed out to June 1st or June 30th, and things are pretty much as normal, namely a slowly growing economy with slowly growing employment and a housing market that's in recovery. So, if you want to put probabilities on those things, I'm basically saying it's about 5%, 5%, 90% in my mind.
Got it.
So the net of it is that I think things will be pretty much as usual when we get through with this.
Kind of kick the can down the road.
I didn't want to use that phrase. That's exactly right. I was trying to avoid that.
All right.
That's too much of a cliche now.
I know. I just love to use it. Okay. The next one is, the title says, I'll Make This Short, and it's talking about short sales.
One of the biggest changes that's occurred over the past 3 years has been the increased willingness of lenders to entertain the possibility of short sales. 3 years ago, the distressed property market was pure chaos. I mean, it was, people were just completely in a fog as to what to do.
Yep.
Lenders wouldn't answer their phones because they didn't know what to say. Realtors would be frustrated because they would have offers, they'd bring them to banks, and the banks wouldn't respond.
Right.
Realtors didn't quite know how to do it. Well, in those 3 years, both the banks, the lenders, and the realtors have learned a lot. I mentioned earlier that Florida Realtors provides education. One of those areas is how to deal with distressed property, and we, in fact, have learned a lot. Everybody's learned a lot. Lenders now know it costs them less to okay and push through a short sale than it does to take a property into foreclosure and go into the judicial process. So if they're looking at cutting their losses, they're looking at short sales. They're more willing to do it. Our numbers suggest that short sales have displaced foreclosures as the major category of distressed property. And we're going to see more of that as time goes by. And I think that's a good thing because it gets properties out of danger, onto the market, and into a buyer's hands much, much more quickly. So I'm all for it. I think it's a good move. I think it's a great development, and it's a very positive move.
All right. The next one is Don't Deduct the Deduction. It's talking about the mortgage interest tax deduction.
Mm-hmm. Well, at $90 billion a year, it's an awfully attractive, whatever you want to call it, tax expenditure, loophole, whatever you want to call it, for the guys who are trying to balance the budget in Washington. And so it's going to be looked at. And if we ever come to an agreement as far as the fiscal cliff is concerned,
right.
Well, there's a strong probability that the mortgage deduction will be there. Now, I don't think that's a good thing, because I think that removing the mortgage interest deduction or limiting it is going to wreak havoc in the housing market. It'll affect values. It'll affect people's willingness to buy homes. It's not something you can simply wake up in the morning and say, poof, it's gone, and not have any consequences. There are severe consequences. And if there's any change that's going to be, it has got to be done over a longer period of time, gradually. But I'm not sure that we should change it at all. I think, in fact, we're probably used to it enough by now. It's built into the market, it's factored into the market, and I think we should keep it.
Next one is titled "A Billion Here, a Billion There," and it's talking about banks and foreclosure tactics.
Well, banks are. Let's put it this way: we went back and a while back. We talked about the housing downturn. And there's so much blame to go around. It'll take us years to work it out. It's pretty clear now that in the rush to get, homes into foreclosure, which, again, I'll go back to what I said earlier about the confusion of 3 years ago. That confusion led to some practices that were pretty sloppy on the part of banks, and now they're being found out about it. And that's clouding the situation even more, because we can't be sure of what is a distressed property, what's not distressed property, what we should do with it, et cetera, et cetera, et cetera, how to treat the homeowner. And when you get all those things together, you're basically dealing with a mess we don't need in a recovering housing market.
Next one is 3 out of 4 ain't bad. It's talking about the tax amendments in November.
Yeah, well, we had hoped to provide additional stimulus to the housing housing market through a change in the homestead exemption for non-resident owners and for first-time buyers. That did not pass. And
you're talking about Amendment 4?
Amendment 4. It's a lot easier. You know, the last time it was Amendment 4, we were against it and it was defeated. It's a lot easier to defeat a constitutional amendment because you only need 40% of the vote.
Right.
To pass it, you need 60, so it's harder. But what we're attempting to do is stimulate the market by making it more attractive for people to relocate here and making it a little less expensive for first-time buyers to enter the market. We think there's a real problem with first-time buyers in the market, and I think that's really where we were aiming with that particular legislative initiative.
Next title is Help for Homeowners Literally Underwater. And that's
one of the
about
things
floods.
One of the things that doesn't really get factored in when we talk about housing affordability and when we talk about the ability of people to become homeowners and maintain home ownership is the escalating costs of insurance in the state of Florida. And we are not unique in this regard, but we're probably the most affected in this regard because of hurricanes.
Yep.
When the hurricanes of 2004 hit, insurance costs for homeowners on the water in the Northeast went up. Well, now, when Hurricane Sandy hit the Northeast, now we'll see increased pressure on insurance rates in Florida because insurance companies treat water as water. It doesn't matter where it is. And this becomes a bigger block for people who are trying to maintain their homes, particularly folks who may have their mortgage paid off, they may be retired, and they're looking at a relatively fixed income, and now all of a sudden, bingo, what happens is that insurance costs are now going up and making it hard for them to stay in their houses. I think this is a problem that needs to be addressed a little more effectively than just simply citizens insurance in order to avoid, shall we say, an unwarranted pressure on homeowners.
And that's getting right into the next topic, the Florida Citizens Property Insurance Corp. They look like it's going to be more expensive and will cover less. Is that the deal?
Yeah, I think it has to go in that direction. I think that I think by and large the model here is got to be a fairly broad one, along the lines of the uninsured motorist pool. In other words, you have to really spread the net very, very wide in order to make sure that the insurance fund is sound, and at the same time the cost of the insurance is affordable by people. And I think there's a lot of work ahead on that one.
All right. The next one is Global Shift. It's talking about international buyers loving Florida.
Yeah, I want to go back, as I said, to hold on to that 45% price drop. Here's where it comes in. Two things have happened over the past 6 years. Number one, obviously, Florida house prices are cheaper. But number two, exchange rates have gone against the dollar to a certain extent. All right? And the result of that is that offshore buyers, people from other countries looking at Florida real estate, are looking at an enormous discount. Just to give you the most extreme example, if you have to be from Brazil and you're looking at Florida real estate now as compared to 2000, the peak of the boom, you're looking at prices that are one-third.
John, you're breaking up a little bit. Are you?
Okay, it's one-third of what they were.
Okay.
And so the net is that it's almost irresistible not to come to Florida when you add in things like the climate, the security of being in the United States, et cetera, et cetera. Now, over the last 2 years, the percentage of home sales in Florida by foreigners has averaged about 23%. All right. So in other words, nearly 1 out of every 4 homes sold in Florida in 2011 and 2012 were accounted for by folks who were not U.S. citizens or U.S. residents.
Got it.
And that's a lot. And we're seeing a lot of that happening. And it's very interesting, just if I can just expand one little bit.
Yeah.
It's amazing how these enclaves occur around the state. So, for instance, the number one group in South Florida, Miami, Fort Lauderdale, are Brazilians. In Orlando, it's the English. In Sarasota, it's Canadians. So, I mean, we're basically talking about folks picking various enclaves around the state, but yet a tremendous demand by foreign buyers for property in Florida.
The last title of the the most important stories in real estate is sizing up appraisals.
Mm-hmm.
Talk about that.
We did a survey of commercial realtors last summer, and we did 300 telephone interviews around the state for people who were both realtors and people who were not members of the association, people from small firms, people from large firms, people who dealt with small deals, people who dealt with large deals. And the top two, and when we asked them about what the problems were facing the market, the top two problems they had were, number one, financing, and number two, appraisals. People are finding that appraisals are not coming in to the point where they can make the deal happen. Now, that goes all the way back to the beginnings of the downturn, the beginnings of the investigations into what went wrong with housing, and the rules which came out of New York State and were adopted nationally, which effectively say, and I'll be very pejorative about this, they effectively say if you know anything about the local real estate market, you can't do an appraisal in it. You have to be from somewhere where you don't know anything about it. You know, there are folks from your area, for example, who are coming down to Sarasota to appraise property. Well, you know, I don't care how smart these guys were, how well-trained they were, and I'll give them the benefit of the doubt to say they were excellent. You can't do it. You just can't do it. You have to know the market. You have to know what to look at, et cetera, et cetera. So starting there, we've built up an appraisal system which is just inaccurate, and we've got to address that issue coming forward in 2013.
Well, John, very good stuff. I think I told you in the beginning my expertise is government auctions, and one of the best auctions I ever did was in your part of the country in Sarasota when Northport and Sarasota County had 2,000 taxes-cheated lots that were sold by auction that helped bring in $65 million to the county and the city of Northport. Were you there 5-6 years ago when that auction happened?
I was.
Well, that was a real interesting and very difficult sale to do, but it seemed like it worked out real well and made a whole bunch of records. So I was pleased to do that. How can people get a hold of the Florida Realtors Association for more information, to read more stuff about what your predictions are, and to get more involved in real estate?
Well, the website is Florida Realtors, one word, .org. And if you go to the research page, you'll see a lot of the stuff we're developing, but you can go to other pages as well to learn more about what's going on in the real estate market and what's going on in the real estate industry in the state of Florida. So that's www.floridarealtors, one word, .org.
Very good. And is there a telephone number if people want to call there?
Yes, it's 407-438-1400.
John, thank you so much for taking time out of your holiday schedule and really telling our listeners what happened in 2012, the big stories. I thank you very much for coming on. Have a great weekend and a great holiday season.
Well, back to you the same. It was a pleasure talking with you, and I hope to talk to you again.
You bet. Take care, John.
Take care. Bye.
All right. Dr. John Tuccillo. He is Florida Realtors' chief economist. Very good stuff. We could probably make that into a 3-hour show. Let's go quickly for a break, and we'll be right back.
MarkNet Alliance is a national, membership-based network of 41 auction companies. Our companies are successful auction professionals with proven track records and thriving businesses. The MarkNet companies have a staff of over 540 employees who are working hard every day to meet the goals of their clients during our ever-changing economy. MarkNet companies are able to achieve these goals through cutting-edge technologies and ever-growing investor pools. To view the hundreds of auctions currently being conducted, or for more information, visit marknetalliance.com.
All right, we are back. You're listening to National Real Estate Auction Radio Show. I'm your host, Doug Dennison. Our sponsor is Raul Auctions. They are a national real estate auction firm that started in 1936. They do online auctions, on-site auctions, and ballroom auctions. They have offices in Florida, New Jersey, California, Georgia, and have alliances with auctioneers and real estate brokers across the country. They do government auctions, bankruptcy auctions, and much more. They have a big auction schedule coming up, so check out their website at www.rowauctions.com, or you can call them at 800-323-8388. That's 800-323-8388. They do have a mammoth sale coming up on January 31st. 5,200 acres, more or less, in 4 counties in Georgia. It's going to be January 31st. It's going to be on site. It's 10 a.m. Eastern. It's going to be, again, in Jefferson County, Georgia, 3700 Baldy Road, Bartow, Georgia. And I am sure that there's going to be internet bidding involved, because that's what Ryle Auctions does. It allows people to bid from their business, their home, out of state, out of country. They are excellent at doing the internet auctions, and again, that's 5,200 acres, more or less, in 4 counties in Georgia. That's going to happen January 31st next year, 2013. Again, very, very happy to have Dr. John Tuccillo on the hot seat today. He really told us exactly what happened in 2012, his slant on the different stories. There were 12, 13 stories that really made an impact on the real estate market in Florida. I was interested to hear about, why the heck are we such, high and low people or state as far as the ups and downs, and he had it right. It's we're one of the biggest states, just like California is, and we tend to get the big highs, and we tend to get the big lows. And John did a wonderful job. I want to thank Summer Green, who's the president of the Florida Realtors Association, that helped get Dr. John Tuccillo on. Also, John Seabury from the Florida Realtors Association, that is in the legislative area, and also Doug Damhurst, who is the editor of the Florida Realtor magazine. They all had a hand in trying to get Dr. John Tuccillo to come on during this holiday season, and he was home, and yet he was happy to come on for the full hour. And we really have people that stay on for the entire show, because they normally just don't have that much to say, to be honest. But this gentleman, I think I could have talked to him for another 2 hours. Very, very good information. And again, I want to thank Dr. John Tuccillo from the Florida Realtors, giving us a heads up on what happened last year and hints about what's going to happen in 2013. I would say that he gave us some real good tips on what's going to happen in 2013 too. 2013 for me and Ryle Auctions, and this program has been very successful. I want to thank all the listeners who listened to 4 different congressmen that came on the show this year. They talked about government property, government surplus property that needs to be sold to help the budget. The holding costs are just killing the American taxpayer. I always bring up the post office in Washington, D.C., the post office annex that has been abandoned for 10 years and costs the American taxpayer $6 million a year in holding cost. 10 years times $6 million is $60 million. That's just one of those properties of the 14,000. Now, trust me, that's one of the big ones. But there's other courthouses. There are other office buildings. There are warehouses. There are pieces of land that the government is sitting on right now that need to be sold. If they are sold to the private sector, it will help the local economy, the tax base, and all those businesses in the area. This is something we need to push. I'm hoping that the next Congress will take this seriously, that the Senate and the House can get together with the help of the president to get this thing passed. Very, very important. Thank you for listening. Make sure you hug your families in light of the tragedies that have happened. Always good to give the families just an extra big hug. You take care, and next year I'll be on the show again.